Hey everyone, Amazon CFO gave investors a lot of insights into where the profits of its business is coming from. So here's what I thought Amazon stock investors really need to know about where Amazon's profits come from. So let's take a look. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. All right, so the CFO noting that worldwide operating income came in at $15.3 billion in the latest quarter, which is our highest quarterly income ever, and it was $3.3 billion above the high end of our guidance range. So not only is the $15 billion number remarkable as it is, but it was $3 billion more than what the highest expectation was for the company coming into the quarter. That's why you've seen Amazon stock price have so much momentum upward, is not just because revenue is growing, not just because it's playing in the AI space, it's demonstrating excellent growth in profitability and cash flow. The CFO goes on to say that the inputs that matter most to their customers are selection, price, and convenience. And one way they add selection is from third-party sellers. And their revenue that comes from that segment came up by 16% year over year. And third-party sellers are increasing adoption of their optional services such as fulfillment and global logistics. Amazon is able to provide their third-party sellers more than just a platform to sell their products. They're offering these third-party sellers more of what they need: fulfillment, logistics, payments, all of these little things behind the scenes that they understand businesses need, and they're providing them at scale. And Amazon's able to do that at a low price because it has so many businesses on the platform. It's got so much experience now. It understands what these merchants need. And therefore, the third-party seller unit mix came up 61%. That was up by 200 basis points year over year. So as time goes on, more of Amazon's sales is coming from third parties. That means Amazon doesn't own the inventory. Its inventory is the merchants. And so Amazon is just acting as a facilitator, which is far more profitable for Amazon. It's far more profitable because Amazon doesn't need to invest in the inventory. It doesn't need to pay for the storage of the inventory. Amazon can charge these third-party businesses for inventory. Amazon can charge the third-party businesses for shipping. Amazon can charge for financial services, etc., etc. So it's a more lucrative business model the more Amazon can offer third-party mix, and then selectively sell products itself and find products that it knows it can do very well and deliver those, make those. And so I think so far it's going well. The North America segment, operating income came in at $5 billion. The operating margin of 5.8% was up 460 basis points year over year, as the company is finding improvements in their cost to serve and transportation rates have moved lower. The key here is Amazon's finding improvements in the cost to serve. It's finding ways to make this business profitable. In something 2 years ago, 3 years ago, I was skeptical on Amazon's ability to achieve this. I didn't think it could achieve this level of operating profit margin in these e-commerce based segments. I was bullish on the AWS segment and advertising. Those segments, I had no doubt Amazon's going to do really well. But these e-commerce based segments, I felt, how is Amazon going to make money selling a $4 box of cereal and shipping it to customers for free? I just thought that was going to be a tall task to execute. But Amazon has managed to execute that. Amazon's managed to get consumers to bundle orders all together, to give them enough incentive with the subscribe and save feature to get them to order all at once and have it be a recurring order so that Amazon only needs to stop at your house once or twice a month and deliver you the 10 or 15 things that you order every month. And in that way, it can become profitable if it operates more so in that way and less so in sending one-off items that prices are, between $5 and $30, that's hard to profit off of because the cost of shipping is so high. Amazon's achieved it. 5.8% operating profit margin. Kudos to the Amazon management team. The international segment also doing well. Operating income came in at $903 million. The margin was 2.8%, but that was up 710 basis points, driven by the established countries as they improve cost efficiencies through network design enhancement and volume leverage, as people are ordering more often, ordering more things each order. That's allowing them to generate better profit. Furthermore, if two people on the same street order something on the same day, that's also beneficial for Amazon because then it only needs to stop once on that street and it can deliver both items. So all of these little things add up for Amazon. As the business scales, it becomes more and more profitable. The leverage in the business, the operating leverage in the business, has good potential to expand these operating profit margins, especially in the hands of a capable management team like Amazon. If you weren't excellent at managing the business, this type of business model is so difficult to execute that you would lose so much money and you would be out of business very fast. But Amazon's skill has allowed it to grow to this size and magnitude and still generate sufficient profitability and cash flow to continue growing. It's impressive what Amazon has accomplished. And despite these improvements that Amazon has already made, the CFO thinks there's several opportunities to further lower their cost to serve and improve profitability in their worldwide stores, while still investing to improve the customer experience. And that's the other thing I have been talking about with Amazon for the last few years now. They've been delivering these profit improvements while also improving the customer experience. I highlighted up above the things that the customers from Amazon value, and that's convenience, its price, and its selection. And Amazon has added more selection by offering third-party services that attract businesses to the platform. And the more businesses that come on Amazon's platform, that's more items that are available for customers to shop around. The more items that are available, the more customers come through, and then the more businesses want to come on the platform because there are now more customers. Also, the more businesses that come on the platform, those businesses compete with each other. Competition lowers price, and that's good for Amazon's customers. The more businesses, the more items on Amazon's platform, and the more customers allows Amazon to invest more in the logistics network. It gets more information on customers' ordering patterns, and it gets to send items to customers faster and faster. Of course, the faster Amazon sends items to customers, or the closer Amazon gets to its customers, the shorter the distance, the travel time, that's less price to ship, and of course, that's lower cost if it's closer to the customer. And also getting the item to the customer faster adds convenience to the customer, and it increases the customer value proposition. It's all feeding on itself, this positive virtuous cycle for Amazon as it continues to build. So this is interesting here, getting these insights from the CFO in the increases in the profit margins of its various retail segments. I didn't go into AWS here because that segment is, 30% operating profit margins. It's, very lucrative. It's this e-commerce segment, the retail segment, that I had been skeptical of a couple of years ago, but each and every quarter, Amazon has made excellent progress since the economic reopening to get itself to this point where it's generating $5 billion in operating income in the North America segment and $903 million in the international segment. These two segments, a year and a half ago, were not so profitable. The international segment was negative, actually. So kudos to Amazon's management team here. Good job in getting the business in line and improving profits. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.